QuickBooks Online 2025 Summary Balance Sheet. Get ready and some coffee because we're learning how to save time with QuickBooks Online 2025. Here we are online in our browser searching for that QuickBooks Online test drive, the free sample company file available to everybody. Looking for the result that has Intuit.com in the URL because Intuit is the owner of QuickBooks. We're going to be choosing the United States version of the software, and then you got to say that you're not a robot. Just click the button. It's okay if you've got those digital implants so that you can play video games faster. I don't think that those count right now, so you still are okay to use the sample company file. So this is the sample company, Craig's Design and Landscaping Services, opening the major financial statement reports as we do every time. The reports on the left-hand side. We're in the standard tab. In the favorites, right-clicking on that balance sheet to open a link in a new tab. Right-click in the P&L, the profit and loss, otherwise known as the income statement, to open a link in a new tab. Let's go to that middle tab, close up the ham boogie. Change the range, going from 010124 tab, 123125 tab, selecting the drop down to see it in years, running it 2425 side by side. Let's go to the tab to the right, the next side to the right on the tab scenario, closing the ham boogie, and do the same range again. 010124 tab, 123125 tab, dropping it down for years, running it to refreshing it. 2024 and 2025 looks like QuickBooks is basically trying to move some of that data over to 2025 as we move on in the practice file. So if you're following along, you want to choose the practice data period where it has data in it, and that's what we need to be doing. All right, so now we're going to go back to the balance sheet. This is going to be our comparison balance sheet. Now thinking about the summary balance sheet, when we might use it, how we might be putting it together, in essence, is the general idea. Remembering that when we look at the balance sheet and the income statement, those are the major financial statement reports. All other reports basically being parts of them or usually giving more information about one or multiple line items of these two major financial statement reports. Our goal of bookkeeping is to create these financial statement reports, at least for year-end income tax purposes if we're a small business and located in the United States, and possibly also so that we can provide this information to external users like shareholders, for example, or possibly to get a loan, and for internal reporting and decision-making purposes. Our other goal as the bookkeeper is to communicate with whoever we need to do financial transactions with, which is when we're going to be using, in the plus button, the customer and vendor sections when necessary to track the outstanding receivables and payables. Now, I mentioned that because when we're communicating with our client, oftentimes it's the end of the year that it becomes really important, but we most likely want to be giving our client information periodically in as clean a format as we can, because that's going to hopefully give them confidence that, hey, we're doing the work, we're earning our revenue over here, and we're going to be here for you when you actually need the data at year end, when you have to deal with all the stuff you've got to deal with, including income tax reporting, possibly payroll reporting, 1099s, and then there's the kids wanting presents and all that kind of stuff, which is, that's beyond what we do, but, they have to worry about that stuff too. So you got all this stuff happening at the end of the year. It's crazy time, so we're going to have the reports ready for you. So how do we do that? We try to make things as clean as possible. So we have basically the standard balance sheet, remembering that the format of the standard balance sheet is basically going to have the normal categories for a normal financial report, meaning assets is a normal category for a balance sheet report, then current assets, but then within that subcategory, we have not the subcategories, but the account types, meaning if it's a current asset type of account, we're going to have bank accounts because those have a special need within QuickBooks to be connecting to the bank. So in normal balance sheet reporting, we wouldn't really have another subcategory for bank accounts. We would just be grouping everything together under cash and cash equivalents typically. But for QuickBooks, we need the bank account because it's going to give us this triangle based on the account types, which have a special need of connecting to the bank. Accounts receivable, having a triangle because it has a special need of having a subledger breaking out the receivables by customer, not just by date. And then everything else is in the other current assets. So just a quick recap of that. If I go to the first tab and then we go down to the transactions, we can then say that our chart of accounts, let's go into the chart of accounts tab up top. We can see that the accounts are being set up here where our current asset accounts have a further subcategory of the bank accounts, the account receivable type, the other current assets, fixed assets, and so on and so forth. That's going to be useful for us to understand how the balance sheet is basically being formatted, and possibly how you can kind of clean up the balance sheet to make it more like it would be under normal financial statement reportings, in which case you wouldn't normally have the bank accounts. You would be calling it just cash and equivalents and combining those together. Now, beyond that, we could have further triangles breaking out, not by the account type, but then creating subcategories, as we can see with this particular one, for example, and which is more common when we're on the income statement, particularly with the expense accounts, which we might want to house and group certain accounts under parent accounts. So that's going to be here where we have the further breakout, for example, on the truck. Notice that these are indented. We'll talk more about creating the chart of accounts in a future course or presentation when we start the whole company file from scratch and enter all of the data from scratch. But we want to point that out here because that's going to be useful in terms of how we're going to present the information. So again, you might want to present it in a more simplified type of way, especially when you're first getting into, say, a presentation. So if I'm going to go talk to a client, I want to clean it up as much as possible to start with, and possibly then lead people into the more complex topics that I need to get into. If I start with a month-by-month breakout of the balance sheet that has a vertical analysis and this report is spanning, 5 pages wide, I'm probably not going to get anywhere because no one's going to listen to me off the bat, right? It's also possibly going to confuse people, even if I just give them that report as basically my month-end normal bundle of reports. It's going to be too overwhelming. So we want to clean it up oftentimes, and one way we could do that is to have a summarized balance sheet. Now, you could get to a summarized balance sheet by basically just compacting all the triangles. I can just say, I'm just going to minimize the triangles here so that this is basically my summarized balance sheet. So I'm going to say all of the categories will be grouped together. And so that is, in essence, it. Looks like that, right? The problem is that if I print this out in this format, it might still expand them as I print them, or try to export them as a PDF file. So when I'm working within QuickBooks, I can easily expand and non-expand. But if I export this to Excel, or if I print as a PDF, then it might expand these items. So we could run a different report that has them compacted like this by going to the first tab, going down to the reports, and then we're going to go into the business overview, and we go into not the balance sheet, but the balance sheet summary. Now, remember that we were saying that most of these balance sheet reports can be created from the standard balance sheet, such as the comparative balance sheet. Now, you can kind of think of that as being similar here with the summary balance sheet, which can be created, as we just saw, in essence, from the standard balance sheet. But once again, it won't have the triangles on the summary balance sheet, which will make it cleaner to generate and easier to print without them expanding, as well as export to Excel if we need to. So this is one that it does make sense that QuickBooks would put this in here as its own report, because we can't really create it like it is from the standard balance sheet, even if they didn't want all the other reports that were there that we could create, right? So I can right click and open this in a new tab. Let's take a look at it, and we'll go into this one. And so let's do the same range. Let's go from 0101. Let's go to 4 to 12/31/24. Let's just do it for 2024 because I think that's where most of the data is. And if I run that, there we have it. So now you've got a pretty clean looking balance sheet. So this will be if I was to give a presentation, this might be the lead off report that I would go into. If I was to give a batch of reports, then the question would be, do I want to give them this summary report first and then give them this report, which is basically redundant because it has all the same data in it, but this gives me more detail? Or do I want to remove this report entirely and give them this report, which has the added detail in it? And do I want to, even on this report, do I want to just show this report with one period, or do I want to have this year compared to last year? Because I could imagine I start with this report, and then I have another report just for the current year, 2025 possibly, and then I have a comparative report comparing the current year to the prior year. A lot of that information is redundant, but it's easier to see on a summary balance sheet versus a one period balance sheet versus a comparative balance sheet, which could then compare, for example, the difference between the two periods and the percentage breakout. So just a few ideas on how you might use these things. Now, normally, if you're working internally, you want to have the standard balance sheet and income statement open, as we have been doing, meaning this is what I would normally do when doing data input. I would open this tab and then have my balance sheet and income statement open, or possibly alternatively a trial balance, because it is in essence the balance sheet on top of the income statement, but without the subtitles, the subcategories, subtotals, and it'll be broken out in debits and credits. So that would be more efficient, but some people aren't comfortable with that. They'd rather see the balance sheet and the income statement. Therefore, I would open these two reports and then do data input over on this first tab, refresh these tabs every time I do the data input to verify that the transactions impacted the accounts that I thought they should impact, is the general idea. But I wouldn't use the summary balance sheet for internal purposes. Why? Because these categories are giving me they're not giving me all of the accounts on the balance sheet. They're giving me the account groups, meaning under current assets, we have the bank accounts. So I might have multiple bank accounts. Those are simply all the accounts that have the added functionality of QuickBooks needing the bank feeds. Under accounts receivable, I might have multiple accounts receivable accounts, although I typically only have one. And then under other current assets, I might, of course, have multiple other accounts under other current assets like prepaid assets and so on and so forth. And I might have multiple accounts under the fixed assets, that's property, plant, and equipment, like equipment, automobile, building, accumulated depreciation for each of those. Under the liabilities, I might have multiple accounts payable, although I typically don't. Under the credit cards, I might have multiple credit cards. Notice they broke out another category of credit card because, again, that's going to be like a bank account, meaning you can connect the bank feeds to it. And then we, of course, might have many categories under other current liabilities, including payroll liabilities, including sales tax liabilities, or consumption tax if you're not in the United States of some way, shape, or form, current portion of loan payable, for example, and then we might have more components of long-term liabilities. So notice that this is a lot cleaner to look at than this when this is all opened up. It's a lot shorter of a report, and therefore it's a good lead-off type of report to lead people in if you're giving a presentation, or possibly if you're bundling the report together. Using it internally doesn't work, because if I want to get into the checking account, if I click on this to drill down to the source data, it's going to give me two accounts worth of sort data, right? Here's the checking account and here's the savings account. Now you might say I could deal with that, right? Because it's going to give me these, I can collapse these, so I can still kind of use that. But typically what I want to see when I'm working internally is all of the accounts listed out here, so that when I record something, I can choose the proper account that I want to see that it got posted to, instead of seeing all these, instead of having them grouped together. So that's the general idea with the summary balance sheet. You can, of course, do all of the things we did with the summary balance sheet as we did with the standard balance sheet, meaning you could make a comparative summary balance sheet, multiple months. So we could do it on multiple months. We could do 2 periods, comparing the 2 periods and so on and so forth, which again leads to a whole, you have almost infinite number of reports now with comparative reports. So the questions that come up, do you want to do a comparative? I mean, maybe if you do a comparative report, you think it's already complex to have a comparative report, comparing this year to last year, and then looking at the difference in terms of the dollar difference and the horizontal percentage change analysis. So you might say, look, maybe I'll just do that with the summary balance sheet, and then it'll look a little less overwhelming, even though I have the added detail. Let me just show you what I mean. Let's say that we had 2000, let's make this 2025 to 2025. And then this is going to be 12/31/25 for 1 year. And then I compare it to the previous year, and I do a dollar change and a percentage change. And then I run that. So now it's a much more detailed report, but it's still cleaner. It looks more simple than if we did the same analysis over here on the standard balance sheet. So if I did it here, 01/01/25, and then we do it to this one, here to here, boom, and run that. So now we've got, it's both longer and wider, right? Whereas over here, we made it wider, but at least it's not as long. So these are the comparisons we have to kind of put together. Maybe I can say, hey, look, for my horizontal analysis, maybe I make the horizontal analysis with the summary balance sheet instead of the full balance sheet, so that they're going to give more information in this summary kind of format. Or I could do both. I can have this report and, this report, this giving me more detail, this giving me, the summary information. That means that this information is somewhat redundant because you could get it from the longer report, but this is a cleaner report to look at on the eyes. So we'll get into some kind of batching the reports together in future presentations, but these are the things we want to kind of think about. How exactly are we going to batch the reports? How are we going to present them in presentation format versus giving them to a client? How can we make them look as clean as possible using the formatting here, which might include, for example, cleaning up the negative numbers and the name. So we might go into, for example, the customized reports. As we have seen, I would typically remove the pennies for external reporting because they're not usually necessary for decision making. I like to make the negative numbers red oftentimes, and I will typically remove the date prepared, time prepared, and report basis. So I can at least clean it up like that. Those features, as we can see in switching to the modern view, would be under the general options where we have rounding here, negative numbers, and then the footer, get rid of the date prepared and time prepared, just to see it there. Let's go back to the classic view. If I wanted to do more formatting than that, like changing the text or formatting, I could export it to Excel. Maybe I don't like this prior year here. I can take that off if I don't want to. Maybe I don't need this column that says total completely. Maybe I remove that. That's not really necessary, right? That's only there because of this field. So it's there because of the formatting of the database, but it's not really adding any value. So I can remove that. Maybe I could in here remove the sub date. Maybe I don't want that sub date in there as well. So a little bit of formatting in Excel, as we'll talk about in future presentations, can go a long way in making your reports look more individualized. So you don't want to get too far because then you'd have to do that every time. But just noting that, we'll take a look at that in future presentations. And then, of course, once we get the reports batched together, we might want to save them, save customization, and we can put them in a group, say like month-end reports. Let's just say month-end reports, put them into those month-end reports and save it. And therefore, at the end of each month, I can easily generate these reports, just changing the date by going, say, to the first tab over here in the reports. Instead of within the standard tab, I can go into my custom reports month end, and there is our balance sheet that we can generate nice and easily. So what I might recommend doing, what we might do in future presentations, is to possibly even number the reports to put them in order under month-end reports so that I can just open up the reports that I need to be generating at the end of each month, end of each quarter, end of each year, and generate them and then group them together in a format that I can provide to the customer or client, which might mean that I export them or print them as a PDF file, group them into a zipped file at least, instead of emailing them as 10 different attachments, or possibly I group them together using the management reports, which gives you a little bit clean look, but not a whole lot of flexibility, or I actually export them using Excel and possibly Word together to batch them together and then printing them out as a PDF file, possibly using a PDF printer, which will give you all of the reports on one PDF file, hopefully in a nice, clean, professional look, noting that many clients possibly won't even be looking at it too closely other than until at the end of the year when they're doing their taxes, right? Because they're just trying to get their business done. But it'll look neat, and that'll give them confidence that you're doing the job, that you're here for them, that you're earning your wages, and when it comes time to do that taxes at the end of the year and external reporting, you've got the information set down, ready to go.